Connect, Alex will speak to that. You do exercises, that's on Connect, Alex will speak to that. And you do a quiz. And then comes chapter 2. You read it, you do the summary, you do the Learn Smart, you do the exercises, you do the quiz. For some reason, the order on my page is a little bit different, but it's always the same. Read, summarize, Learn Smart, exercise, quiz. And then once in a while, you have a little bit something extra, like, for example, a discussion or an extra credit assignment, right? That would come in addition to the stuff we always do, which is, who remembers? Read the chapter, then comes summary, Learn Smart, exercise, quiz, right? It's really easy to memorize. This is one way to look at our things. Is the modules page. In the modules page, you again, guess what? Summary, Learn Smart, exercise, and quiz. And then you also have the lecture material and the introduction. Basically, this is what also Bob will tell you about the chapter, and also the introduction and the lecture material I will actually send out prior to each chapter. You can read it from the email, or you can click on these links here. And we will post, like, for example, today's lecture as a video on the lecture page. And Bob, that reminds me that I actually wanted to ask you to record our lecture today. So we usually have an older lecture on file, like summer lecture from Bob, so that people who are early birds, they can watch the lecture before, like, you know, if you want to work ahead, you can watch Bob's summer lecture or lecture, depending what's on there, and it will be as good as this one, but it will be with other students. Okay, so basically this is how we are organized. In modules, you see the chapters. You will see then a module with the exam. I always have a practice exam I would like you to do, and it's all on Connect, and Alex will explain to you where that is. And also then the exam itself is on Connect. I want to encourage you to take the practice test for the midterm as often as you can, at least once, but try 2 or 3 times. The question will be usually a little bit different, because Connect has these, like, it's the same problem, but it will have different numbers to it. It will change so that you really get a good practice for your exam. And the midterm exam then is one time only, and it's timed. So you have only one shot for that, but you will be really well prepared if you have done the practice test. Okay, so basically that is the setup. Please read the syllabus in terms of points. Here is the syllabus, and again, my apologies that the link didn't work. I did attach the document to an email which I send out tomorrow. In that email, there's also my cell phone number. If you have a time-sensitive issue, feel free to text me. But usually I'm good in responding within 24 hours. But if 24 hours is too long, you're welcome to text me. Please make sure that you tell me your name and what course you're taking, because I don't see that in my text message. So again, read the syllabus, and please also take the syllabus quiz. There's a lot of interesting stuff, I hope, about usually students go all the way down here, how we do our grading scales. I didn't put it in there, but I do give pluses. I usually don't give minuses. The reason for that is that I'm not allowed to give a C minus. And so I think then I don't give any minuses at all, but I do give pluses if you are borderline to the next. to the next grade. So here's again, like the 8-week overview for our class. It's another way to look at it. You can print it out. I would like to emphasize one thing. We have the live lectures. We also have tutoring. The tutoring, guess what? Done by Bob as well, because he's my only tutor this semester. We have various hours. You can see them on the homepage. We also have Net Tutor. You have all these links here on the side. So where you can get direct to either the Zoom meeting or the Zoom tutor or the Net Tutor. And Bob and I are offering you, I think, 10 points extra credit. If you attend at least 5 sessions prior to February 1st. So all the way through January, either this lecture, and you're already here, well, this is first, this is one, or tutoring, or also tutor sessions, right? Just send me a screenshot, but pretty much you guys need to record when you attended, and I go usually pretty much on an honor system. Sometimes we track who's there. I think for tutoring, Bob does a good job on tracking. For lecture sessions, he may or may not. But so it's on you to actually remember when you attended.
You'll be logged into the tutoring system. Don't forget, Cornelia.
Yeah. So I would like to leave student view and go to modules. So how do we get to McGraw-Hill textbook companion? You click, I believe, any assignment. So Alex, I think I let you talk. You are the expert on that. I let you talk from here.
Yeah, so if you click any assignment on the modules here that is going to be housed inside of McGraw-Hill, like that chapter 1 Learn Smart right there, it'll give you the launch button, and it will direct you right into your Connect account. So it should. If you have a Connect page open already up top, it looks like it might be 2 tabs over. I think it's for you.
Okay. Oh, that is it, obviously. Yeah, obviously, yeah. That's why it probably refreshed it. Okay, got it. Thank you.
Yeah,
right.
no problem.
You want me to bring preview up?
Yeah, if you want, I'd be happy to walk through Connect, and I can share my screen if that makes it easier for you.
Oh, that's maybe easier. Okay.
Sure, let's do that.
All right. So Bob, can you make him a co-host too?
Are you set up as a co-host right now, Alex? No?
I do have a share screen button here. I can give it a shot. Let's see what happens.
Yeah, there we go.
All right. So Cornelia, did you want me to walk through the registration process?
No, I don't think we should, but all the ins and outs of Learn Smart, the outs the autosave, and then the exercises that you have to click save and exit or submit and stuff with all
Definitely.
these. And also the recharge thing, I think is very interesting for our students.
Yeah, absolutely. So for those of you who aren't registered for Connect already, I will send over a PowerPoint slideshow to Cornelia and Bob, and they can forward that to you. And it's just a step-by-step process. It's actually what I was just going to share for that. One thing I do want to cover in this, if we're not going to go over the whole registration process, is we have support and resources that are listed here. And I'll also share this with your instructors, and they can pass this on to you. Monday through Thursday, we have 24-hour support. So if you're like me at all and you do your homework very late at night and you run into technical issues there's somebody there to help you and walk you through a resolution. The other thing I did want to cover is we have a couple of different apps that we offer for smartphone and tablets. And this essentially allows you to download the ebook and carry it with you wherever you are. So if you happen to be, doing homework at a coffee shop and you don't want to click back and forth between the ebook on your computer and the assignment that you're working on, I would highly suggest downloading one of these apps. They're free to you once you've registered for Connect, and you'll have instant access to your ebook. So we'll go ahead and dive into Connect. And Cornelia, I just wanted to let you know that I registered as a student actually for your course, so I can walk everybody through this. So you're going to see me registered in your class. Don't worry about it. It should drop off in 2 weeks. I just did the free trial access. So,
I hope grades, right?
I'm sorry.
I hope you will get really good grades, right? On this stuff.
Hopefully I would do better this time around in accounting. So
Alex, I have a really quick question. I'm so sorry.
Sure.
App Store for my iPad. And is it the McGraw-Hill Connect ED app, or is it just the SmartBook app?
It's the McGraw-Hill Connect app. So the SmartBook app would essentially allow you to access Connect through your iPad. So you can download both of them if you want.
Okay,
and
so it'll be both.
Free to you. So once you do register for Connect, it will ask you for your registration, and you'll be good to go from there.
Thanks so much.
Yeah. And I encourage any of you guys to stop me and ask me questions here. Like I mentioned in the intro, I'm still fairly new to McGraw-Hill, but I'll answer everything I can. And if I can't get an answer for you right now, I'll follow up with your instructors with answers. So like Cornelia mentioned, you are going to be seeing 3 different types of assignments housed in Connect here. The first one being Learn Smart or SmartBook. And you'll know that that's the SmartBook one with this SB icon on the right here. So we'll go ahead and click into this, and I'll show you around a little bit here. One thing to keep in mind is SmartBook is what we call our learning adaptive resource. And what that means is it's essentially using your answers to determine how you learn as a student and what we can do best on our end to help you learn better through this course. So with every SmartBook assignment, you're going to see that you're going to want to start with the reading and go through the content there before moving on to the questions. One thing I will like to point out is that all SmartBook assignments are graded on completion. So it doesn't matter how many times you answer a question wrong in here. Essentially, it's going to want to make sure that you are able to answer everything right before you can complete the assignment. Cornelia mentioned that you guys are covering 2 chapters a week. I highly suggest getting on the SmartBook assignments early on, just because depending on how quickly you pick up on the topics, it could take you a little bit longer to work through these. So we'll go ahead and click into the reading. I'd like to point out that everything highlighted in yellow here is going to be what McGraw-Hill and the authors have determined they would like you to focus on, what's most important in the chapter, essentially. So you can continue reading down, and once we complete the reading, we can move on to the questions, which is going to be this blue tab right here. So the first thing I'd like to point out is at the top here, you can see you have a progress bar. Now, there's 43 concepts in this SmartBook assignment. In order for you to complete the assignment, you will have to complete all 43 concepts. If you answer a question wrong, which I'll go ahead and just do here, it's going to not give you any progress in the progress bar here. if you answer a question right, you will see progress filling in these bars, and that lets you know that you're moving through the assignment successfully. With every question, you're going to give a confidence on the answer. So if you're highly confident, somewhat confident, or not at all, you're going to select one of these here. So you can see that I obviously got this one wrong, and it did not give me any progress up top. We can move on to the next question. I'll give a high confidence. Now, one thing you'll see is I just answered 2 questions in a row incorrectly. And so it's going to ask me to read about the concept before I can move on. This is going to bring us back into the Smart Book. You're going to see the yellow highlighted content, like I mentioned earlier. And then now you also see blue content. And this blue content is going to be what the questions that you answered incorrectly are specifically focusing on. So when it brings you back in here, make sure that you're reading this blue and move back to the questions, and you can be good to go from there. Like I mentioned, for Learn Smart, you are not getting graded on your answers necessarily. You're just getting graded on completion. With that being said, if you don't have the time to sit down and complete all of it in one sitting, you can exit the assignment up here, and it's going to auto save for you on Learn Smart assignments. And after exiting, I can go back into it and work on it as long as the due date has not passed. Now, the second type of assignment that you're going to be working in are your regular standard homework type assignments. And you're going to see they're going to be listed as exercises here. So we'll open this one up. Your exercises and your quizzes are going to be fairly similar with one big difference. And I'll show you that as we get in here. Notice that you have unlimited attempts on this. So that's something to keep in mind as you're working through it. So in your homework, it's going to be very similar to the Learn Smart assignments, where it's giving you questions. You put the numerical value in here and answer them accordingly. The one thing that you're going to see in your homework assignments that you're not going to see in your quizzes is this blue check my work button up here. The check my work button is going to do one of 2 things. It's going to say you're correct on that or you're incorrect, and that's it. It's not going to tell you why you're incorrect or which part of the question necessarily is incorrect. If I were to check it right now, it's probably going to tell me, yeah, that my answer is not complete, and I would have to complete filling everything out before moving on. Outside of that, the regular homework assignments are pretty straightforward. One thing to keep in mind is when you click submit here, think of it as handing your homework in person. You don't have an option to go back and work on it again. If you did want to save and exit, say same situation, you don't have enough time to complete this, but you want to come back tomorrow or later on this evening, you can click the save and exit button. Your assignment has been saved and you can exit now. So make sure you're not clicking the submit button unless you are confident that you're finished with your assignment and you're ready for it to be graded. Now, the last type of assignment we're going to see is the quiz. And like I mentioned, the quiz is going to be very similar to the exercise, with one big difference being that you don't have the check my work. Sorry, I'm moving camera screen all over the place here. And it's going to be the same, straightforward, read the question, answer the question. And then just like the exercise, you have a submit button. Only click that if you're confident and finish with the quiz. If you want to save and exit and come back later, same deal. Now, on your home screen, I'd like to show you very quickly, if it loads, let's see what's going on here. Oh,
And
here.
everything is open book. Because
Yeah, and
whatever you do.
that's what I was going to point out next to you is if you are using the Read Anywhere app or the ebook app on your the Connect ebook app on your tablet, you have access to it there. If you wanted to access the ebook in your Connect course, it's going to be right here. If you did want to upgrade to a loose leaf copy, you can do so here, and we could have that shipped directly to your house. I don't know the exact price on it. Typically, it's between $20 and $30 if you've already purchased Connect for a loose leaf copy of the text. Cornelia and Bob, are you guys going to house your recorded lectures in Connect, or is that going to be in Canvas?
In Canvas.
In Canvas, okay. So
I didn't
the
know
other
you
thing,
can house them in Connect, but we do Canvas, yeah.
okay, great. So yeah, you'll access your lectures in Connect then. But on the topic of the ebook, if you see a button inside of any of your homework assignments or Learn Smart or quizzes that has ebook written in blue, you always have access to it. If it's not listed there, you don't have access to it. The instructor doesn't want you using it. But like Cornelia said, everything is going to be open book for you guys. She did mention the midterm and practice exam. That's going to be right here. So you can see that you're going to work through 5 chapters before reaching it. If you open this up, you'll see your regular midterm and then your practice test. I'm assuming, and you can correct me if I'm wrong. Yeah, unlimited attempts on your practice exam. So that I can tell you right now, my accounting instructors did not do that for me. I would highly suggest taking advantage of that. That's very nice of them to do.
By the way, there's always like several ways to do things. So Alex is showing how you can find all these assignments within Connect, but also if you are in Canvas and just click on, you want to do the practice exam now, you can click on the practice exam in Canvas and the system will like take you to the exam immediately.
Yeah, that's a great point. And thanks for pointing that out. Yeah, you can access anything that's listed in Canvas will redirect you to Connect here. One thing I will say is, and I know I kind of touched on this before, but with SmartBook assignments, which is the adaptive learning assignments that you're graded on completion, you really want to pay attention. And I'm saying this to you as a student who in the past used Connect and used SmartBook. At first, I thought I could kind of just, blow through it because I was comfortable with the material. But I think you'll find that if you spend just a little bit of extra time reading the content before answering the questions, it's really designed around your knowledge base, right? So for the first couple of assignments, it's going to be just getting to know you as a student. And then after that, it kind of picks up on your learning habits and is really designed around your learning style. So I would take advantage of that, definitely. And then the last thing, unless Cornelia wants me to touch on anything else, is if you don't remember the name of the mobile apps that I mentioned, you can get them right here under the ebook. And it'll pull up for you the name of them so you can download them for free on your phone or tablet. Does anybody have any questions for me? Nope. Perfect. That's good. Cornelia, did you want me to touch on, oh yeah, I'm sorry, the recharge. So one thing you'll see, and we don't see it right now because I haven't submitted any of these assignments, right? But once you've submitted an assignment, there's going to be a box that pops up just to the right here that says recharge. And this is something newer that McGraw-Hill has been offering, and we've seen great results with it. And essentially, it's going to allow you as a student to pop back into these assignments that you've already submitted and already been graded on and use them as review. And this is going to continue to boost the adaptive in your Learn Smart material. So the more you review, the better it is for the technology that you're using, as well as, you know, bettering your knowledge along the way. But like I mentioned, that box isn't visible to us right now, only because we haven't submitted anything. So as soon as you submit it, you'll see a box right here that pops up and says recharge, and that's where you would be able to hop back into it and review.
Right.
Any questions on that? Nope. Bob or
So
Cornelia,
so much, Alex. What I wanted to point out again, and I know Alex said it, but the important difference I want you to keep in mind is Learn Smart is autosave. You just like answer the questions, and like when the due date comes, Connect will see, oh, 100%, 97%, or I hope not only 25%. So whatever percentage you have done will be recorded, fixated, and sent to me. For the exercises and for the quiz, you actually have to hit a submit button. It's not auto submit. On the other side, exercises and quizzes can be submitted late. Remember, you like late credit if you do the assignments, but you can't make the due date. Because for me, it's important that you actually do them. I think I'm deducting 25%. The problem with Learn Smart is if you want to do that late, it will never give you the points on Canvas. So what we have to do is, if you want to do a Learn Smart assignment late, you need to email me and let me know, and then I will open it up, or we find another way. But it's not like that you will, let's say you say, oh my goodness, I missed the chapter 1 Learn Smart, I do it next week, and then you're working on it and you do all the questions, and then you call me and say, hey, why are my points not showing up? Okay, just so this is the important, it's one important difference as well. Okay.
Perfect. Well, if nobody has any questions here, I'm gonna hop off, but what I will do is, Cornelia and Bob, I'm gonna send you that PowerPoint that I mentioned earlier.
Okay.
For your students who have not registered yet, if they need any kind of additional resources to walk them through it, that's a great one for them. And then also in the last, I believe it's either the last slide or the second to last slide, I pulled it up earlier. All of the customer support information for your students, if they happen to run into any kind of issues with Connect, you know, in the middle of the night for whatever reason, they can call those numbers and get help right away.
Great.
And Brianna, if you happen to run into registration problems with Connect, then just let me know. And either if it's something small, I can help you. And if not, I will call Alex to the rescue.
Yeah, absolutely. I'll hop on another call. No problem.
Okay, thank you so much, Alex.
Thanks, Alex.
All right.
Great.
Thank you, everybody. Enjoy your semester.
Thank you. Bye.
Bye.
So for everyone else, I'm going to hop off too, but Bob will stay here, and Bob will do a short lecture on chapter 1. Luckily, chapter 1 is not a very hard chapter, so you guys will be fine. I would assume another 45 minutes or so. Okay. All right. Never hesitate to reach out via email or again, cell phone number. Yeah, please just treat my cell phone number responsibly, right? Don't share it anywhere. Okay, Justin, what's your question?
I emailed you right before this started about the accounting 240 class on the backside of the
Yes,
semester.
I already saw that email because I was, I know, while Alex was talking, you know what? Is anyone else already registered for the 240? Because there appears to have been a problem. Guys, whoever, if you are in this class, I guarantee you a spot in this 8-week 240 class. I just guarantee you that. Don't even worry. I don't understand. It sometimes works and sometimes it doesn't. Justin, I will take care of this again. Okay?
Much appreciated. Thank you.
All right. Have fun with Bob's lecture. Okay. Thank you,
Bye, thank you.
everyone. Bye.
Okay, thanks, Cornelia. Okay, I guess I'm back at the controls. First thing, give me couple of seconds here, real quick. I'll try to sneak away. I'm returning. My boss doesn't like me to wear sweatshirts when I'm on teaching, and I'm freezing to death. That'll be our secret, okay? All right, here we go. I didn't realize this was a condensed class, which is good in a way because you can really pound away at this. So let's go through chapter 1. And let me first say the tutoring is quite helpful. You've got my hours. You can text me anytime. I'm usually available. I kind of live by myself here. I'm COVID stuck in this room. So I've got time to help you, okay? So let's see. My first question is, did anybody take 110 here? No, everybody's, okay, Justin took it, okay. That's a little bit of an advantage getting started, but not a insurmountable thing. So let me bring up here our PowerPoint. We'll go through it in some detail and get you out of here reasonably soon here. Hold on. This thing doesn't want to work here. Hold on. Bear with me. This thing is not allowing me to share for some reason. But hold on, I have a way to get around this, I think. Boy, I hate when this happens. This is embarrassing. I have a PowerPoint file I'm just trying to share here. Does anybody have any suggestion for me here? I've never run into this before. I'm opening up a file. I have it right here, a PowerPoint file. I can see it. You cannot see it. Is that correct?
Correct.
You cannot see it.
No.
I go in here to share my screen, and it's not there. It's not there.
Something is.
There it is.
We can
There
see
it is.
There it is.
I have no idea what I did. Okay, we'll get started finally, huh? I just have to set this up the way I like. Any of you ever watched The Big Bang Theory when it was on television? You know that show? I'm a little bit like
Yep.
Sheldon Cooper. I have to have this thing set up my way. All right, here we go. We'll go through chapter 1. Cornelia said not a tough chapter, but it's a good basis. Next week is Martin Luther King Day, which is a holiday, but I'm still going to do the lecture if any of you like to join me live. And in that lecture, I'm going to go through chapters 2 and 3 together. They really do have to be taught as one, I think, because chapter 2 is basically 110 basics. And then chapter 3, we get into the world of the debits and the credits and the accounting terms we're going to use, okay? Start off with different types of businesses, sole proprietorships, partnerships, corporations. They all have advantages and they all have disadvantages. The sole proprietorship is easy to open. You pay a fee to a city and you can open up a store. You run the place by yourself. You reap all the profits. The problem with a sole proprietorship is if you invest, say, $10,000 in your business, and somehow you manage to go broke and you now owe $1 million, you are personally responsible for that $1 million. So that personal responsibility is a big risk with a sole proprietorship and with most partnerships. Same thing with partnerships, 2 people or more sharing in the profits, sharing in the management of the business. If a partner dies, that's the end of the business. And I'm going to point out that accounting firms, legal firms, architects, consultants, many of them are partnerships, and they have the same liability as a sole proprietorship does, total personal risk. And I think the reason those kind of businesses are partnerships, they're demonstrating to the world that they're confident in their abilities and ethics, and they're not worried about getting into any kind of legal problem. The advantages of a corporation: here, you buy a share of stock in a company, you own the company. If the company goes out of business, you can't come after the management team unless there's some fraud involved. And double taxation is a disadvantage. You pay taxes on the net income and then dividends later. That's probably more than I needed to do on that particular screen here, okay? So let's just go continue here. We have managerial reports over here on the right. These are for internal decision makers. This here is accounting 240. We're not doing internal reports. The reports we're going to do here, we're going to call them financial accounting reports, and they are done under the rules of GAAP, GAAP, Generally Accepted Accounting Principles, an acronym you're going to know like the back of your hand. And the reports we're doing in this particular course are for external people, for creditors, people who loan us money. No one is going to loan our company any money unless we can produce audited financial statements. No one is going to invest in our company, buy our stock, if they don't think we can put decent statements together. Different types of activities, just real quick. Operating is what the company does. Coca-Cola sells soda. They produce soda, they bottle soda, and they sell soda. Any expenses involved in doing that is the operating. If they borrow money, that has nothing to do with making soda. That's financing. If they have enough money lying around where they buy stock in another company, investing. Again, I'm going a little bit quickly through that. Now, hopefully, when you get done with your first chapter's homework, you understand what these 3 statements are. And I say 3, not 4. The balance sheet. The balance sheet. It reports the assets, liabilities, and the equity of the company. The balance sheet is a snapshot. It's a photograph. The balance sheet says we had these amounts of assets, and we'll talk about what assets and liabilities are. This company had $1 million in cash and $1 million in equipment, and they had $500,000 in liabilities. Liabilities are a debt. money you owe. The difference between the two is your value of the business, the stockholders' equity, the net book value. Income statement snapshot. I'm sorry, balance sheet snapshot. Income statement is pretty simple to understand. It's your sales minus your expenses. It's as simple as that, and we'll get into some detail. And then the third of the three statements is your statement of owner's equity or stockholders' equity. If you start a business today, you put $50,000 into a business, well, your equity is $50,000. That's what the business is worth today. At the end of the year, if you made a profit of, say, $30,000, now your equity has gone up by 30. The equity is 80. If you pay dividends, it would reduce the equity. Statement of cash flows, we have a whole beautiful chapter on that, and we're going to get into that in great detail later. Let's look at the balance sheet. The balance sheet. Assets equal liabilities plus equity, and we'll go over that in a moment. What are assets? We know what assets are. Anything of value owned and under the control of the company that they hope to use to make further profits. Cash, that's our favorite asset. Short-term investments. This company had so much money, they went out and they bought 1 million shares of Microsoft. Accounts receivable. That's an amount of money owed to us at that point in time by our customers. Notes receivable is different. That's money we loaned, inventory or merchandise, supplies, prepaids, etc. We have current assets, meaning assets to be chewed up in a year, and long-term, which are going to last a long time. Liabilities. Remember, liability is a debt. It's an IOU. We owe money. And there's different categories of that, huh? Accounts payable. That's money we owe to our normal business relationships. That's what we owe to the electric company. That's what we owe to the phone company. That's what we owe to the guy who sells us our merchandise. Accounts payable, or trade creditors, if you will. Accrued expenses, that would be like salary, expenses that we haven't recorded yet but need to at the end of the month. Notes payable is borrowing. Taxes, we know what taxes are. Bonds payable, that's where we've borrowed money from somebody and to be paid back many years later. And unearned revenue we'll get into. That's like Dodger season tickets. I buy my Dodger season tickets today. Today's January. When they get that money, it's not income to them yet. It's actually a liability, huh? They owe me baseball. And the difference between the two is stockholders' equity. And here we're talking in the form of common stock and retained earnings. Let's talk a little bit about retained earnings. A lot of students kind of get fouled up on this, and I hope to get us off on a good start. Think of retained earnings this way. You started a business today with $100,000. So your stockholders' equity is $100,000, okay? You issued common stock to the world and you got $100,000. At the end of that first year, you made a profit of, say, $60,000. That $60,000 income increases stockholders' equity under the category of retained earnings. When the business began, there was no retained earnings. You had nothing to retain. So you make a profit of 10 the first year, 20 the next year, your retained earnings is now 30, 40, etc. Retained earnings. We're going to look at this company here, Le Nature's Inc. And when we get to the end of these last few slides here, they throw a little twist at us that I find interesting, okay? And they're just explaining here some of these definitions, and I'm sure you'll get familiar with these, not terribly hard. Notice the accounting formula. Assets equal liabilities plus equity. That's the basic accounting formula. The first day of any bookkeeping class. Assets equal liabilities plus the equity. This company has $527 million worth of assets. If they said to you, I'll sell you my company for 400 million, would you do it? Well, you probably would not, based on that information, because you would want to know, yeah, you have $527 million of cash lying around, maybe that's great, but you owe almost 408 million. Therefore, this business is only worth 119. Now we can talk. Okay. Can't emphasize this enough. Assets equal liabilities plus equity. Assets equal liabilities plus equity. And again, it's a photograph at a precise point of time. As of January 31, 2020, this company had $1 million in cash. They had so much in receivables. They had so much in inventory. You subtract from that the amount that they owe, regardless of what it is, taxes, credit people, accounts payable, and that becomes the equity. Assets equals liabilities plus equity. If the balance sheet is a snapshot in time, the income statement I think of as a video, because this is accumulative. The balance sheet, cash goes up and down, and then at the end of the month, you say, well, right now we got $5. The income statement is constantly accumulating numbers. Numbers are going up every day. You have sales minus expenses. Revenues, another word for sales. We know what sales are. Sales revenue, they're indicating here, there's probably selling merchandise. Fee revenue, maybe we're a licensing organization or something. Interest revenue, maybe we're in a position to loan money to somebody and they owe us that. Rent revenue. My entire working career until I moved to Santa Barbara 22 years ago was in the world of accounting 240, factories, cost accounting. And our factory, we always rented out part of the building to people. We had a little apartment there. So we can have all kinds of different revenues and then expenses. And by the way, these definitions are terrible. Cash and promises received, resources used. We know what they are. Revenues and expenses. And you have different types of expenses. Who knew? You got to pay your workers, salaries and wages expense. You got to rent a building. You have insurance to pay, depreciation, repair, and cost of goods sold, which is another one I'd like to pound into us this first moment here. Cost of goods sold is simply the amount that you paid for the item you just sold. Cost of goods sold is recorded on your income statement as an expense at the point of sale. For example, you sold a mink coat for $10,000. Well, that's your sale amount. You paid $6,000 from the wholesaler to bring it into your store. That $6,000 is your cost of goods sold. Now, we'll be talking a lot about cost of goods sold throughout the semester. And here they're showing you the income statement for Le Nature. And they had 275 million in sales. And apparently what this company sells are energy drinks, things like that. Their cost of goods sold was 140. 140 is what it cost them to buy the beverages that they sold for 275. They had selling, general, and admin expense. Those are called operating expenses. You're selling your salesmen, their commissions, their offices. General and admin, that be the management of the company, the accounting department, etc. So they're looking at a profit of 22 million on sales of 275, about 9% roughly. Let's look at the stockholders' equity again. Stockholders' equity, assets equal liabilities plus equity. So in our book here, we're dealing with a corporation, okay? For those of you who took 110, we're not doing any of that stuff where somebody puts $100,000 into the business. We're just going to ignore that element here. So this company began by issuing stock. They issued stock for $1 million, just to pick a number. So that became their equity. That's what the business was worth at the very second the business began. They had no retained earnings. So your beginning retained earnings plus net income minus dividends equals your ending retained earnings. You see this block I'm whizzing around here? This is your whole statement right here. And students get a little rattled at first. The equity statement is your beginning equity plus income minus dividends. Dividends are arbitrary amounts that companies choose to pay to shareholders. At my age, not that I'm ready to jump in a grave with you, but my age, in my 70s, I have some pretty good dividend paying stocks. I live on some of those dividends. Those kinds of stocks are probably not right for you at your age. Companies pay dividends not because they want to, but they do it to attract more investing in the company. Let's take a look at the equity statement. The equity statement. What do we have here? We have a line called the beginning, the balance at 12/31/11. They had 55 in common, 43 retained. And then during the year, they earned that 22 million we saw earlier, but they issued $2 million worth of dividends. So their equity went up 20.9 million. Those are the three basic financial statements that we're going to be doing like crazy over the next 8 weeks, whatever this condensed course is. Again, not worried about the statement of cash flows, okay? Operating, investing, financing. Just know that those are the three categories. That's all you need to know. I will point out here's a real summary. This is just an absolute summary. The cash at the beginning of this period was 1.6 million. We all see that cash balance, December 31/11. At the end of the year, it went up by 9 million to 10.6. Well, what happened here? We had operating positive cash flows of 87.5. That's great. That's where we want to see the positive cash flows. And we also borrowed money, and we also invested in other companies. So those are the three components: operating, investing, financing. Cash flow statements are important to investors. Here's a good grid to look at, and this is in your book too. This is crucially important. When you prepare these 4 financial statements at the end of the month, you must do them in this order. You must begin with the income statement. And here's a summarized look at that income statement we saw earlier. Remember the 275 in sales minus the 252 gives us net income, 22,900,000. Okay, we can go to the boss right now and tell him, okay, we had a profit of 22.9. We can now use that number to prepare the second of the 4 statements, which is the statement of equity. You must do them in that order: income statement, statement of equity, balance sheet. Why do we do the income statement first? Because we must know what the income is in order to update the beginning equity. So we had retained earnings at the beginning of 43.1. We bring over that income and we subtract the dividends, and now we have a new balance in the equity account. It went from 55 to 55.7. They didn't issue any more stock, but the retained earnings jumped by 20.9. Now that we have the equity number, we're ready to do the balance sheet, because that income, which we drove into the retained earnings statement of equity, that resulting retained earnings now gets dropped down into your balance sheet. So take a look at the balance sheet. Balance sheet, assets equals liabilities plus equity. So you're thinking of investing in this company. You say, well, they have $500 million worth of assets, but they have liabilities that represent 80% of that. So this business on paper is only worth the 119 or whatever that number was. And then once you have that done, you can come over here and do your cash flows. Did you notice a sentence at the bottom of each financial statement? I didn't, but I guess there was supposed to be one there. When you're looking at a company's financial statement, you're thinking of investing in General Motors. You call up their financial statements, and just about every number on that financial statement will have a note giving you some more detail. Notes are super, super important. All financial statements accompanied by notes that provide the reader with more information. Again, I kind of like these one-page breakouts like this. I think it makes it a little bit easier. I just wish they would do it in the proper order. The income statement is done first. Income statement, revenues minus expenses. Once you have the income, you add it to your beginning equity balance to get the ending balance in equity, and then you can do your balance sheet. GAAP, 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 generally accepted accounting principles. In order to have a company listed on any stock exchange in the United States, in order for any company that's not listed on any stock exchange to borrow money, attract investing, they must have audited financial statements prepared under the rules of generally accepted accounting principles. Prior to the Great Depression that began in October 1929, the stock market was a bunch of rogues. Nothing was audited. You could put numbers up there that made no sense at all, and people were relying on them, and eventually they got hurt. Franklin Delano Roosevelt became president, started his term in 1933, and one of the first things he did was he got Congress to set up the Securities and Exchange Commission, which I'm sure you've heard about. The Securities and Exchange Commission monitors the companies that are on the stock market, the New York Exchange, the over-the-counter, whatever. And you cannot get yourself listed unless you have prepared properly audited GAAP statements. Oh, here's something you need to know. Not really, but I find this interesting. Our accounting system has a long and distinguished history. Father Luca Pacioli, an Italian monk and mathematician, published the first Elements in 1494. I'm such a nerd. I actually read a biography of this guy. Does anybody know why 1494 would be significant in developing accounting? What happened historically 1492? Anybody remember? In 1492, Columbus sailed the ocean blue. Christopher Columbus discovered America, right? In 1492. And suddenly there was, for the first time, truly international overseas trade. You needed some good accounting systems to keep track of this. And that's kind of where this came from. The SEC, generally accepted accounting principles. You have the Securities Exchange Commission. And what they do is the Securities Exchange Commission says, look, we're not accounting guys. We don't know how to really put the statements together, but we trust the Financial Accounting Standards Board to do that. So all of these rules come from the FASB, another acronym you need to know. It's an easy point on a test because they usually give you a true or false on that. International perspective, we're not worried about that in this class. Ethical conduct, huh? Boy, we could talk about this a lot. Ethical. And they're just making a little editorial here. Identify who benefits from a financial decision. okay? And who would be harmed. If there's any harm involved, maybe there's an alternative course of action. And finally, choose the one you would like your family and friends to see if it was ever on the news. And throughout the course, I can regale us with companies that cheated. And you saw all these guys, these billionaires being perp walked out in handcuffs. That's what they were doing, unethical. And guess what? The company we've been studying, LeNature, they turned out to be a bunch of crooks. It was determined that the financial statements for LeNature were misleading. So let's see what happened to the company. Well, the chief executive officer, he got 20 years in jail. The president, the consultant, the COO, which must have been the guy's son, his wife went to jail. Shame, shame on LeNature. Who's heard of Bernie Madoff? Raise your hand. I want to see if anybody knows who Bernie. Okay, it looks like most of you. Hey, he's a fellow Northeast guy like me, you know. Bernie Madoff, 64 billion. That's B, a billion, $64 billion. He had a scam going that was the classic Ponzi scheme. And somehow he kept it going for like 40 years till it finally collapsed. And he was just a master. He was reporting income that always beat the stock market, even when it didn't seem possible to do that. If you had your money invested with Bernie, you were getting 10%, 12% every year. No exceptions. It was going on forever. Of course, what he was doing is he was paying the old people with the newer investors. It got to the point where a billionaire would approach Bernie and say, Bernie, I've got $5 billion. I want to put it into your fund. You know what Bernie would say? No, I don't need your money. I got too much going on right now. My fund is getting too hard to control. There's too much money. What do you think the other person responded with? Oh, please take my money, Bernie. Bernie says, okay. And eventually this crashed on him. So Bernie is now doing basically a life sentence in a North Carolina prison. He was a bum. And I'm going to bore you real quick. I'm a big baseball fan. I like the New York Mets. The New York Mets put money in Bernie's fund, lost tons of money, and it hurt the franchise. They couldn't go out and make trades, buy players, and things like that. Here we go. That's his number. You got to memorize Bernie's number. Real quick as we finish up here. Who is responsible for the statements? It's the management of the company. The management. It used to be management could say, oh, I'm not the accounting guy. I don't know how these numbers popped up here. And they had a bit of a shield. Those days are long gone, okay? So companies, they have controls and auditors and boards of directors to make sure they do things correctly, okay? I think we've had a pretty full afternoon here, don't you? Would somebody like to ask a question? All right, who's going to ask a question? Nobody. Everybody wants to get out of here. Okay, I make a motion that we finish today and take this class up again on Friday. Do I hear a second to that motion? Nobody wants to say that.
Sounds good.
There we go. Somebody said, okay, so let's knock it off for now. Okay. Hey, see you all on Friday. Okay. Bye-bye.
Thank you.
Bye. Thank you.
Appreciate it.